Hello and welcome to this short video about cost structure, aimed for managers and non-accountants who might have to deal with this. The activities which take place in a business incur costs, and categorising these activities can help us predict future costs and risks. So the activities can be grouped into those which are incurred in producing an individual unit of output, which we call a unit level cost. Those producing or servicing a group or batch of units called the batch level costs, which doesn't happen in all situations. The costs involved in producing or servicing specific products, the group of products or services in the product range, and these are called product sustaining costs. And the cost of servicing the whole business, in which you might be making a variety of products, and these are the facility sustaining costs. So here are some examples of the different types. So the unit level, if you're making a loaf of bread, it's the flour you use. If you're running an educational program, it could be marking the script for just the one student. At the batch level, if your bread tends to be made in batches, so you make up a whole load and the labour of that is the cost of the batch. Or if you're teaching a seminar with 20 or 30 students in it, it's the cost of the room. The product sustaining costs, so if you have a piece of equipment specifically for one particular product you make, then the depreciation on that will be product sustaining. A recipe for a food product, writing the material for a module in education. And facility sustaining, warehouse rent, depreciation and salaries for managers. Now, to understand the significance of this, we need to look at the way these costs change as we make more and more units or deliver more services to more customers. For all the types of non-unit level, the costs go up in chunks. Nothing happens for a while and then there's a sudden increase. For the unit level ones, obviously every time you make an extra unit the costs go up, so it goes up like this. Right, so risk. Now the unit level costs are low risk. If your output falls by say 10%, then the cost, this particular cost, will also fall by 10%. If the output falls to zero, so do the unit level costs. So your expenditure moves with how busy you are. These costs are also known as variable costs or marginal costs. The non-unit level costs, however, will not fall in proportion to a fall in output, and they will never reach zero. So whatever happens, you're committed to spending some money on these, which is why they're sometimes known as fixed costs or unavoidable costs. The cost structure of a business describes the relative proportions of the unit level costs and the non-unit level costs in the business. The higher the proportion of unit level costs, the less risky the business is. The amount of risk can be measured as the operating gearing percentage using the calculation you can see here. The bigger the number, the higher the risk. You can also use this information to forecast costs. So if you take the unit level cost and multiply it by the number of units you're planning to make, add your non-unit level costs, that gives you a cost. And we can do this because if you think back to the earlier graph, this one here, you can see that these non-unit level costs are quite stable over ranges of output level. So this makes them relatively easy to predict. So let's look at an example. Temple Limited, the maintenance equipment at Temple Limited. So the more products you make, the more maintenance you have to do. So the costs per unit are £1.60. The other costs amount to £22,000 a month, and they're expected to be stable up until 10,000 units a month is reached. Now next month we expect to make 6,400 units. So what will be the maintenance cost next month? So £1.60 times 6,400 plus the £22,000 which are stable, and this gives us this total cost. So we know roughly that next month we're going to spend £32,240. Right, that's the total cost. What about the cost per unit? So here's another example. Unit level costs are £2. Non-unit level costs are £50,000 a month, and this month they produced 5,000 units. So what was the cost per unit? So £2 per unit for 5,000 units is 10,000, 50,000 for the non-unit level costs, a total of 60,000. Divide by 5,000 units, the cost per unit is £12. However, you should note that the question, what is the cost per unit, is not as simple to answer as you might expect. The previous month, instead of 5,000 units, they had 4,000 units. So the unit level costs are a bit lower, the non-unit level costs are the same, and this time the cost per unit is £14.50 instead of £12. So the thing to remember when you want to know the cost per unit is it all depends on what you think your output is going to be. And that's all we really need to say about cost structure. If you want further information, please follow the link here. Thank you for your attention. I hope you found this useful.